Good evening and a very, very warm welcome to the live trade room. This is our weekly trade plan. My name is Tim and I'm more than happy to take you through today's webinar. For those of you that are perhaps new to joining us, obviously you're all very, very welcome indeed. And to just give you a bit of insight into this particular webinar, we're normally done within sort of 50 minutes or so, but it's a 50-minute webinar all about multi-time frame analysis. Of course, the markets are currently closed. Now, this is actually a useful thing to us because it allows us to take stock of what's happening in the price in the markets with regards to price action, and it gives us a bit of time and space to discuss the markets and enable us to plan for the week ahead. So we will be looking to take a technical look at weekly and monthly time frame charts and looking to identify the important highs and lows and the genuine levels of support and resistance that we can use in the live trade room for the remainder of the week. So as always, we'll be looking to observe our 15 liquid global markets plus any other markets you would like us to look at for you, perhaps if we've got time towards the end of this webinar. Okay, so if we can start, as we always do, with our risk warning, please make sure that you are aware of the risks involved in trading the financial markets. Please do take a quick moment to read through our risk warning. Okay, so what is the importance of multi-time frame analysis? Well, we've identified three important points to discuss. And the first one is that you can clearly see what is happening and who is often genuinely in control of that market. All too often, we can get caught up with smaller time frames, very, very choppy conditions, and really taking an opportunity to just take a step back and just see what a weekly time frame or a monthly time frame is doing can actually give you a little bit of confidence in some of the trades that you end up taking. So that's a very, very useful benefit. Also, the larger the time frame, without doubt, the more important the genuine level of support and resistance becomes. So we talk about daily levels quite a lot, daily highs and daily lows and things like that. But if we identify like weekly and monthly genuine levels of support resistance, and these are levels that we can see on a monthly time frame, then they, without a doubt, they become far more important levels to actually take note of. And finally, it can, using or having an understanding of multi-time frame analysis can show you the important levels where a market is likely to move towards as well. So we can use them as take profit. Okay, so that's a bit of an intro. So let's go straight into the charts then, and we'll start as we always do with the dollar index. Good to have you on board, guys. Thanks for joining us. Thank you very much. So let me get up the trading screen then. So we will, as we always do, start with the dollar index. Let's look at what's happened from the daily time frame literally over the last week, and you can see we've had, apart from Thursday's price action, we've had a pretty bearish week. I'm sure you'll agree. So let's have a look at what's happened on a weekly time frame. And the reason why we've identified this specific area there, because it's structurally quite an important level. The last time we were at this price was around here back in November. What would it be? November 2014. So we're talking about 3 and a bit years ago. So we've had a pretty significant bull market followed by a considerable amount of consolidation or price sideways moving price action, followed by a pretty impressive, this is sort of January last year, and you can see where the current price is this year now. So this was sort of end of year. So you can see that this market has only been moving in one direction, and we've got clearly defined continuation pushing prices lower. So in terms of having a directional bias, it's quite clear. It's easy to see and identify. We're simply looking for opportunities to sell this market. Now, it doesn't necessarily mean we have to buy or sell the actual dollar index itself. It's a good indicator. It's a good indicator for identifying directional bias. So we're looking for opportunities to sell the US dollar. So we can work with those weekly levels. Let's have a look. We're coming to the end of the month now. So what you quite often get, especially in the last few days of a trading month, is a little bit of a pullback, a little bit of indecision. Would anyone want to commit to trades at this late in the month? Maybe, maybe not. We'll obviously see what the environment is like, but don't be surprised if we get a few days of a little bit indecision before we get continuation. So with that in mind, then this also happens to be a monthly low. So for the purpose of consistency, we were just looking at last week's 90.74 level down to the 89.93. So we're just going to work with today's last week's highs and lows. So we'll make those changes, and then I'll just zoom in for you so you can see it in a bit more detail. So the idea is we'll change and we'll work with these weekly levels of support and resistance. And it doesn't necessarily mean we buy and sell these levels, but what it does is gives us extra confirmation that this particular market has broken a weekly low or a high, or a monthly low or high, whatever the case may be. And that's why it forms our decision-making process during our live trade rooms during the week. So let's take the high. So 90.47. So I just change this level in here. So parameters 90.470. So that's the high, and we'll also monitor the low of this market, which is 88.23. So I'll just change this level here. 88.230, and there is the low. So that is simply all we're doing, and it's a good form to, like I said, be able to add confirmation to whatever particular trade we happen to be taking throughout the week. So we are looking, we obviously need other things to fall into place. When we trade the markets, it's about stacking the odds in our favor with as many kind of reasons that we can possibly identify. But the market's clearly moving to the downside, so that is the direction in which we want to trade this market. Okay, so that's the dollar index. So moving on to the euro dollar, which is an inverted picture of your dollar index market. So you can see we've had a bit of a bullish week, but Thursday's candlestick was a little bit concerning. We were in a few dollar-related trades, and as you can see, we got very nervous with this price action. That makes us sort of question, the potential, and make sure that we want to now protect capital in this trade, whatever we do. So we were able to book in profit on this trade. It's only a small bit of profit, but we were not willing to allow or let our stop loss be exposed with this kind of action. So that's the premise of looking to avoid losses at all costs. So we're looking at this price action, and Thursday's was very, very well. Obviously, a lot of it was to do with Davos, and it was to do with the U.S. Treasury Secretary, and then the follow-up was very much Draghi in his ECB conference, where he effectively questioned the Treasury Secretary's view on looking for a weaker dollar, and he challenged that premise, and for Trump to actually sort of fall into line with the ECB. It was a very, very clever move. It was a very, very clever way of sort of saying to the US, are you sure you know what you're doing when it comes to talking down the dollar, because the ramifications could be huge. And then Trump fell into line and kind of said, no, that's really not what the US, it's not a US policy. So he very, very quickly fell into line, and I thought it was, Draghi did very, very well in that situation. And the U.S. Treasury Secretary just got a bit of a global pummeling, let's say. So the games continue, so to speak. So we've obviously got to bear that in mind. And when you have politicians, coming out, or Treasury secretaries coming out with statements, you can see the impact that these can have on the market. So at the time, they were very, very, very bullish on the back of the U.S. Treasury Secretary's sentiment for them looking to actually devalue the dollar. But then Draghi kicked in and things corrected somewhat. But we did see a bit of continuation on the Friday, which is like the markets are probably actually believing the Treasury Secretary over Donald Trump, which is, again, is a very, very interesting dynamic. But as you can see, towards the latter part of the day, this market started to reverse too much, really, effectively. So we're still comfortable with our stop loss where it is. There's every chance we might get, even if it's a brief little rollover, back to this, maybe this level or something, where we might look to actually buy it at a much lower level. So it's not really the trade that we're in. We're in a bit of profit, so we're quite happy and satisfied with that. But if it does pull back and we book in that profit, then by all means, that's not the end of it. That's literally the beginning of it. So if we get a nice clean pullback, we might be able to capture this trade to the upside. So that's the euro. So let's work with the with these levels, and I'm just conscious actually of just making sure that I do not move that level. So I wanted to just change it ever so slightly. So that's a bit of an overview, just looking at the monthly charts. So we were likely to run into resistance around these levels, and that hasn't happened yet. And we are coming to the end of the month. So don't be surprised if we got a little pullback or a little bit of a pause now for the remaining 3 days of the month, where price action is not that volatile. We might even get the market just pushing back ever so slightly. And then, because at the moment we'd expect continuation next month to the upside. If it pulls back considerably over the next 3 days, that will be in doubt to some degree. So working with the weekly levels, let's take note of this high. So the high is the 25.36. So 25.36 is the high, and for consistency purposes, let's work with the low of the 22.13 level. 22.13 level. There we go. So that is the euro weekly levels. The pound you'll see is kind of in a similar situation. Oh, sorry, the dollar is in a similar situation with many of the other currency pairs. So largely very, very bullish. Thursday, significant pullback, and Friday, actually significant pullback as well. So looking at the weekly levels, likely to come into a bit of resistance, and that was quickly flushed out, really, and we got a nice bullish week. The close is a little bit uncomfortable, meaning we might see a little bit more of a pullback week, perhaps. This is a good opportunity for sellers now to enter this market from a technical perspective, maybe even capitalize on the last few days of the month and look to just drive this price back a little bit. But we shall obviously wait and see. So again, we'll work with the highs and the lows at 43.43. So let's change this one. 43.43. There we go. And we'll also take note of the low price, which is the 38.56. So 38.56. Right. So that's their weekly levels, the highs and the lows. So moving on. So actually the yen has been, I mean, you can see the same picture, very, very bearish. Thursday's market actually bullish in this case, followed by a significant bearish price action to the downside, and actually a considerable move to the downside. But let's have a look at the weekly time frame, and I'll show you what we're running into now. So it's going to be interesting to see. We're monitoring these levels very, very carefully. We did identify, these levels. 114.50 actually, where we saw the market sort of conduct itself like this, as you can see quite clearly. Although we went through a bit of a, let's say a period of choppy price action. You can see the last 3 weeks since the beginning of the year, we've got this explosive move to the downside. But now we're back at this area for the third time. So we'll see as you can see previously, it failed to close beneath this level. So we'll see if we get continuation, if we get a close beneath that level or not. We'll also be looking to see if some strength comes into the dollar. Do we get an opportunity to actually to buy this market? So there is a few sort of very interesting aspects to that trade. A close beneath that level would constitute a significant sell. As you can see, that would be a major structural failure now to the downside. So we definitely get some downward pressure and some strength coming into the yen. Okay, so let's have a look at it on a monthly time frame. So as you can see, January, very, very bearish. So with that in mind, let's have a look at the weekly levels. Let's zoom in and we'll just identify, which is quite a large range now. As it was 2 weeks ago, was a very large range, but just represents the price action over the course of the week. So let's work with the highs. So 111.21. So 111.21. So that level goes in there. And for consistency, let's work with this week's low, which is 108.27. So we've got 108.27. Right, there's the highs and the lows. Right, good stuff. So so moving swiftly on. If you do have any questions, guys, don't hesitate to ask. Hopefully it's all quite straightforward at this point. So on a daily time frame regarding the dollar CAD, this is one of the, we're trading two markets. We're buying the euro dollar at the moment and selling the dollar CAD. And for those of you that were able to join us during the week, you'll know that this is a bit more of a catch-up trade, whereas the euro dollar and the pound dollar and the dollar yen are very much, well, the yen was a little bit of a catch-up trade as well, but the euro and the pound were making new highs and were very, very strong against the US dollar, and the CAD is, as you can see, catching up a little bit. The interesting side to this, the daily time frame, is the daily close. So it literally has 1, 2, 3 daily lows to break, and we'll get a nice, likely to get a nice push down to kind of these levels down here. And let me just change the color of this particular level. So it's a genuine level of support resistance and not sort of a weekly level. So as you can see, the last 5 days, just quite bearish. Let's take that over to the weekly time frame. Let's zoom in. And so what I'm going to do is, so you can zoom in and you can see that the weekly close is beneath these lows. So we would expect to see continuation to the downside in this market from a technical perspective. Again, it's a monthly time frame. So, again, we are taking into account the fact that we're coming to the end of the month and how that might play out in the market. So a little bit of patience is required on our behalf. We'll just take the weekly low, which is the 22.81, and we'll just change that level just to be very, very accurate. 22.81, and we will accurately monitor the highs as well, which is the 24.95 level. So 24.95. So that level goes into there. So that is the dollar CAD. So last two currency markets. So again, with the euro yen, the euro has been strong, the yen has been strong. So you've got two fairly strong markets. So we're not really surprised to see this kind of price action, which was just, two strong markets over the last couple of weeks. What you get with the pair is a little bit of sideways moving price action. It's interesting to note that the close failed to break above or below this particular range. There's a significant pullback on a daily time frame. All it does is put a little question mark in our mind and suggest that if we get a break at this level, then we're kind of pushing down to this ascending line as a port of call. So we'd expect to move down to that level and see some continuation if that's the case. However, there's enough reason for this market to start by pushing lower and then move back into this range-bound price action. So bit of patience, just wait and see kind of market. It doesn't give us, it doesn't fill us with complete joy when we look at a market like this. So for all intents and purposes, we are actually going to continue to work with the highs and lows of like 3 weeks ago. So let's have a look at it on a weekly time frame. So 3 weeks ago, well, we used the high of 4 weeks ago and the low of 3 weeks ago. The other thing as well is if we monitor this 133.00 level and we get a break of descending line, it might represent an interesting opportunity to buy the yen against the euro. So that's why we're kind of monitoring and just working with that, and we're quite happy to let price action do what it wants to do. See, if we sold beneath this weekly low, we're basically selling into resistance. So that's never really that advisable. So you want to kind of stack the odds in your favor where, selling beneath this level, although we've got to be patient, and we are, I do appreciate 190 pips away from that level, but the patient trade is often the more profitable trade. And we've seen the choppiness on the daily time frame, and that has every chance to continue. And you're seeing a little bit of, on the monthly time frame now, you're seeing a bit of a question mark. So this level is a monthly high and low as well. So that's quite interesting. If we get a break of that level, it would be really significant break to the downside. Okay, so that is the euro yen. So we're working with those levels. So the levels to the upside is 136.62 and the level to the downside is 133.03. So a larger range than normal, but for very, very good reason. Okay, euro pound. And again, we're going to work with these consistent levels. And, I want to just show you the opportunities that, are being able to identify these levels, and looking at the way that the market behaves and bounces off those levels, can represent some fantastic opportunities. So we are so 2 days ago, our low of this market is 86.86, and the low of this market is 86.88. So there's only 2 pips difference between these lows, which is, when you talk about trading financial markets, you're talking about stacking the odds in your favor and trying to put the odds in your favor when you look for potential trades. And working with these levels, you can see how interesting an opportunity they can provide. So we're just going to continue to work with these levels. In fact, just to be super accurate, I would like to work with the actual low, which is 86.86. So it's 2 pips below the current level. There we go. And we'll continue to work with this high. So really the kind of the market conditions in which we're trading, I hope you would agree, is consolidating. So we do have sort of a 400 pip range, less than that, 360 pip range, but that's not so important. What we are seeing is a slight kind of pressure pushing this market lower. So we will be looking at these levels quite closely for an extended move to the downside. Okay, so that is the euro pound. So moving on to the we're going to work with those levels on a weekly time frame. So we just got some weekly consolidation, really, is the market conditions. Okay, so the global indices are, especially the US, are unbelievable. We've had this very, very bullish price action for quite some time, and it continues. So, and I appreciate a number of you have been trading these breakouts and stuff. So, obviously it presents some fantastic trading opportunities. It's been kind of a policy of ours to look for opportunities to buy dips and things like that. So the opportunities haven't overly presented themselves, but occasionally, and don't forget, these prices on a daily basis are at all-time highs. And we've had a lot of experience with markets trading at all-time highs, except, you know, these US markets are a different animal. It feels like as if they keep needing to continue to push higher. You know, and I suppose there is good reasons actually fundamentally for these markets to continue pushing higher, but just to sort of give you a bit of a snapshot, even on a monthly level, this is nothing but an incredible bull market. Even this month, we've broken out of the 2-year, 3-year channel, and has just exploded to the upside, and it looks like it'll keep going until something changes. So with that in mind, let's just work with the highs and the lows. You see, even the close of this market is what's called a Marubozu close. So there's every opportunity, could give opportunities in normal circumstances for this market to sell off a little bit. Very, very unlikely by the looks of it. So we're going to continue to monitor kind of what's happening with these markets and see what is likely to change, if anything does. So we'll work with the highs and the lows. So 28.75. So 28.75 to the upside, and to the downside, we're going to work with the new low of 28.05. So 28.05. Right, so that's the levels, the weekly levels for the S&P. So moving swiftly on, the Dow Jones now. Again, same analysis applies. So what I'm going to do is just work with the highs and the lows. 26,604. And I am getting these numbers from the data window just on the bottom left-hand corner. Perhaps those of you that are perhaps new to joining us, you'll see all the details that I'm referring to, the highs and the lows. So the high of this market is 26,604. Unbelievable is the word that springs to mind. 604. So that's the high. And the low that we'll take note of is 25,964. So working with those levels. So moving swiftly on then to the FTSE market. Fantastic opportunity to buy this on Thursday above the 75.86 level. You can see the pullback to that level of support and resistance. So there is the level, pullback nice and neat to that, and then Friday we got a nice explosive move, pushing prices higher. So let's have a look at this on a weekly time frame. So on a weekly, we've had a bit of a 2-week sort of bit of bearish price action, but then last week's recovery, or let's say Friday's recovery, actually closed above the lows of the previous 2 weeks, if you can see that in there. So that's actually quite bullish, actually, believe it or not. So there's every possibility that if we got a break above the weekly high, that we'll get at least a push back to 77.37. And that's just purely from a technical perspective. So with that in mind, we'll work with the more recent highs. The lows we can change. So 75.52 to the downside. So 75.52, I think I said. Yes, there we go. So and to just reiterate, these levels can inform our trade ideas during the week. So that's the FTSE levels. Okay. Hi, Connor. I'm just reading your message. So the S&P, so if that retraced to the channel, Could you buy at that level if price action was signaling? I mean, to answer your question, without a doubt. So that covers the FTSE. Let's go back to the S&P. Like that would represent the kind of trade that we'd be looking to take, which would be the pullback trade. Which is, as you can see, these pullbacks are so shallow. This is still, all-time highs, and as the market pulls back, the all-time highs are so close to price. That you don't really get the proper pullback that we would ideally like to see if we want to be advocates publicly of trading these markets with a trade idea. It's to buy the dips. The problem is we're not getting any dips, so that's the difficulty. But to answer your question, absolutely, this level has the potential to provide support. So what becomes resistance on the way to the upside, until we break that resistance, can become support to price on the downside. So you're absolutely right. If we get the right conditions, we get a nice sort of doji candlestick back at this level. We buy above the high, sell beneath the low, and it's a bit of a no-brainer trade, actually. Could you use a lower time frame to help at entry? I mean, to answer your question, yes, you can. However, it's important that we trade a specific time frame, that we understand kind of the mechanics of that time frame, and the more you trade, let's say, different market conditions in that time frame, you become so used to making decisions easily. However, if you start looking at smaller time frames than daily time frames, then you have to contend with slightly different dynamics. But I suppose, yes, it is possible. Is there a need to do it? Not necessarily. You can still trade the pullbacks if you get a nice, neat opportunity, and you're still working with daily highs and daily lows. But that decision-making process slightly shifts if you're working with a 4-hour chart or an hourly chart, for example. But it's not to say you can't get in or out at a better price. So there is pros and cons to trading different time frames. So, try to bear that in mind as well. Okay, good. And then there's the risk parameters as well. If you get in at smaller time frame, you'd probably have your stop loss, within that time frame, unless you're using a daily time frame stop loss, and then it starts getting a little bit messy. So when you stick with daily time frames, you can be quite consistent with your entries and be very accurate at what you do. So yeah, it's kind of an individual decision, basically. So yeah, hope that helps. So finishing off the global indices, then you can see very, very bullish. Look at that on a weekly time frame, and again, a considered break above the channel. In these markets on the monthly time frame, nothing but major bull market. Many are calling an incredible bubble. And as we know, all bubbles burst eventually, but by the looks of it, it sounds like that these prices can continue higher for quite some time. So when it comes, it will be interesting, but it doesn't look like there's anything in the pipeline anytime soon. So I suppose that can in itself provide a little bit of comfort potentially in buying these markets. But you've still got to be very, very accurate with your, these are markets that you definitely don't want to be taking losses in any way, shape or form. So if you get into a trade, by all means, it's your own prerogative. But, look to mitigate risk, look to cut your stop loss as soon as you possibly can. And whatever you do, protect your capital, because, if these markets come off, as luck would have it, it'd probably be when you're involved in that trade. So don't allow that condition. Don't give a market like this an opportunity to start selling off against you, where you're hoping for it to turn. These are not the markets. That's why trading all-time highs are just notoriously difficult and potentially dangerous as well. Okay, so 70.33. So we'll just work with these consistent levels. 70.33, the ones that just keep consistently defying gravity. The low is 68.30. So that's that level up there. And moving on to a couple of commodity markets now. So the gold market, relatively bullish week. Let me show you why I say that. It's because we had a quite nice bullish, and this was a really good trade that we took profit around the 1356 level. Looking again at these weekly, so another reason why we look at, or the third reason why we look at multi-time frame analysis, is looking for opportunities to exit these markets. And this was a considerable monthly level, so that was a level that we identified this market to move towards, and it did so very, very nicely. Actually broke above it, and then, as you can see, has pulled back quite considerably on just a weekly basis. So we were able to book in profit on that trade before the market started to obviously plowed straight through initially, but then the realities of this genuine level of support resistance started to stack up in the market, and the price started to push back beneath that low and then kept pushing it lower. So what we'll do is we'll work with these highs and these lows again in the gold market. So the high is 1365.89. 1365.89, and the lows of this market are as well at 1328. 1328.29. 1328.29. Right. So those are the levels for the gold market. Sorry, they're the weekly levels of support resistance for the gold market. Crude oil. This has been a little bit of a frustrating trade for us because we've tried to buy it on a few occasions now, and even on Friday, what we decided on Thursday night was to place our stop loss beneath the low, because there's every opportunity the market could open and push higher. Those of you that were able to join us on Thursday, but and in fact, we'll discuss it actually in our live trade room tomorrow evening, because it's an interesting, what appears on the surface to be a little bit of manipulation, and I want to show you kind of what that looks like. But what it meant for us is the market, just ever so briefly took us out of that trade, but it was a break-even trade. So there was no loss of capital at all in the trade. In fact, we captured it at a nice level and took it higher. But it just so happens we've kind of left this amount of profit on the table with that trade. I suppose that's the nature of trading these markets. Ironically, we adopted the same approach with 4 other trades, and they all started to move in our favor again. It's just this one just happened to just take us out, and we've obviously got a little bit of a theory in terms of why that has happened. So just got a little bit unlucky with that one. But as you know, our bias is very much to the upside. It has been for quite some time, and it's just looking for those opportunities to get into it. So we've been in quite a bit of a bull trend for a while, and had a breakout of that 3 weeks ago. We've extended that move to push this market, and let me show you in a monthly time frame the kind of, we've been back to $27, and we've had nothing but a couple of significant pullback months, but all in all, a fairly bullish market now. As to whether we'll ever get back up to these levels or not, we don't know. The next level is the 69, nearly the $70 level, which would be an incredible price for this market. But that's what we're looking at. Don't be surprised going into the last few days of the month if price sort of consolidates for a few days before we get the new month, where we're very likely to get continuation of price action. So that's the plan. That's what we'll wait and see. So let's work with these, which will be very likely to be monthly highs as well. So 66.63 to the upside. $64.63, did I say? Oh, excuse me. Let me do that again. So the high is 66.63, of course. So 66.63. There we go. That's the high, and we'll absolutely stick with the same low of the 62.82, which is last week's low. And the low of this week was 63.04. So we'll gladly work with those levels. And if the price does break back in between those levels, it could represent an interesting opportunity to sell this market beneath that level. Would give us a very interesting sell trade. However, you can quite clearly see what direction we're interested in trading this market, and that is without a doubt to the upside. Okay. So last market, then we'll just look at the 10-year note. Again, directional bias is looking for opportunities to sell this market. In the live trade room, we've discussed the fundamentals behind this move on quite some period, and we're just looking to continue to look for opportunities to sell it. So we are currently in this market. As you can see, 1 week of just sideways moving price action. That is never unusual when you're looking at these multi-year lows. In fact, it's probably more on the healthy side that's the case. So I'll zoom in just a fraction more. So we're identifying what goes on at these levels, even providing resistance, preventing prices from moving higher. All of these kinds of levels sitting in here, all have had some consolidation enter the market. Now we've moved on to the final phase, which is very much the lows, and we're sort of procrastinating around these levels. But what is safe to say is that if we get a break, and we're talking about a confirmed close beneath this level, 122.09, there's nothing but air, beneath these levels. So we'd expect some considerable continuation to the downside. So let me zoom in then on a weekly time frame. You can see last 3 weeks really have been very, very bearish. We had a bit of bullish price action come in. We've mitigated. We've taken a bit of risk off the table with our sell trade. And the market has looked sort of quite bearish, especially on Friday. And we are still in this trade, but we need to see the price break the weekly low. So those are the levels we're going to work with. We're not overly surprised. The daily price action on this, the weekly price action is, well, it's not what we'd like to see. We'd like to see candlesticks like this, but there is sort of no need to necessarily panic just yet, but we will be monitoring it very, very closely. Okay, so let's work with the lows. So the 121.95 to the downside, 121.95. So that's the weekly low, and the high. So we have our entry price at the low, and we have our exit price at the high of this week's price action. So if we get that break, continued break to the downside, then we'd look to mitigate, much of this risk as quickly as we can. So the high is the 122.52 level. 122.52. Right. So those are the weekly highs and the weekly lows in the 10-year note. The same just basically applies to the Eurobond. We've got at least a confirmed break on Friday below that low. So we're currently selling this market to the downside. And again, that's sort of a similar setup to the 10-year note. So, we definitely got opportunity for this market to push and squeeze considerably lower, at which point we'll decide at that point. But we'll make all these decisions, obviously, within our live trade room. Okay, so so that just about wraps up this evening, guys. We're sort of about 45 minutes in, and we've covered all of the markets that we ordinarily cover. So on that note, if you do have any questions, don't hesitate to post them into your chat box. If you do need to shoot off, that's absolutely fine. And hopefully you can join us in the live trade room during the week. You're very welcome to follow us on Facebook, Twitter, and LinkedIn. The details are there up on the screen. And what I'll do is I'll just get you guys over to the Q&A page. And, you know, we do receive a few emails here and there, not every week, but most weeks. So please use that if you'd prefer, you know, not to post live questions and you'd prefer to, you know, you guys can post screenshots and everything like that as well. So that's absolutely fine. If you'd like to, just drop us an email at support@thelivetraderoom.com, and we do look to get back to you as soon as we can. So let me see. So Yanni, you're saying, can we look at Dow Jones at some point? We have done, Yanni. So I'll get that chart just back up again, if I can find my cursor. So the Dow Jones, you know, these are levels. I mean, all of these markets are in exactly the same sort of bull market. They're in a state of aggressive bullishness, let's say. And the levels that we've identified are 26,604 to the upside. These are just weekly highs, but it's also a Marubozu close. So ordinarily, you know, those can give opportunities to, you know, in normal price action, they can give opportunities to sellers to sell these markets in the normal run of business. But as you can clearly see, that is probably not going to be the case with most of these markets. You know, they're all Marubozu close, and we just see continuation pushing higher. So, so I think that's just about it. So these are bullish candlesticks with no wicks to the upside, and you know, from a technical perspective, they can often give opportunities for these markets to just for a bit of selling coming in. No one in their right mind has the certainly on daily timeframes would be interested in selling these markets. It's just looking for opportunities to buy them. So that is a little bit of review, extra review there on the Dow Jones, Yanni, if that's okay. Yeah, no problem whatsoever. Connor, you just mentioning, could that be a double top? Do you mind me asking which market you were referring to? There was gold, was it? Okay. Yes, it has every potential to behave that way for sure. So we have broken above previous highs, which is slightly bullish, but then the monthly high, it's rejected that level. So this could be a double top, could argue not quite, but roughly a triple top potentially. We've had other resistance at these levels on many occasions. So it's clearly, you know, just this band in here is clearly resistance for the gold market. So you're absolutely right. If you could bide your time, you know, there was a lot of talk as well with this bullish price action being sort of as a hedge to inflation kind of trade. So it had a significant amount of momentum for a fundamental reason, but technicals might start to kick in. Yeah, double, triple top might represent some interesting opportunities to sell the gold market, ironically. Yeah, Connor, will you leave that with me? Can I actually get back to you tomorrow? Because I do apologize. I meant to get back to you towards the end of last week, but I would. I'm going to make a note of it now. I will get back to you tomorrow if that's okay. Okay, great stuff. So I'm just looking through the comments, guys. Thanks very much. Thank you for joining us. Good to have you on board as always. Just hope you found it, a little bit of use in terms of taking an opportunity to just step back and identify what's going on. And hopefully you find that of benefit. But really, it's about adding to our confidence in trades and building when we get into a trade that we look to stack the odds in our favor as many times as we can. And if the weekly highs and lows add an extra degree of confidence to that trade, then all well and good. And that's really what trading is all about. So it's a little bit of homework or a bit of due diligence really before we get into the trading environment during the week. So on that note, guys, it doesn't look like there's any other questions by the looks of it. And I'm just scanning through sort of pretty briefly. Yeah, great, Connor. You're just referring to some of our videos. We have a lot of content in our members area, so it looks like you're enjoying them. So that's great to know. Yeah, we explain things well. I mean, that's good. That's so important to sort of, I suppose, provide a little bit of simplicity in what is often, depending on who you speak to or if you have discussions with industry. And I was very conscious of this, when I first started, I could never really understand why they couldn't talk in straight English, in almost layman's terms, because that's kind of how retail traders, those that are profitable, that's how they kind of learn this environment. And more often than not, it's very difficult for them to speak, in plain English. So that was obviously a big aspect to what we wanted to do, is to provide as best we can a bit of simplicity, or even to try and apply things or to give you the theory behind things in a simpler way as possible. So so delighted that you are enjoying it, at least, and going through it. So that's great news. So on that note, guys, I'll stop procrastinating. I'll let you guys go for the evening. Do enjoy whatever's left of it. So from everyone here at the Live Trader Room, thanks for joining us. Take care. Great, Pete. Thanks to have you on board again. Great stuff. Pleased you've enjoyed it. Absolutely my pleasure. So do take care, and we'll look forward to seeing you during the week in the Live Trader Room. So from everyone here, take care. Bye for now.